I've been helping people get reverse mortgages since 2002. And I can tell you from firsthand experience that when I first got into this business, almost all financial planners, they didn't want anything to do with a reverse mortgage. They certainly didn't request or suggest that their clients get one. Times have changed 180 degrees. Over the past 5-6 years, there's been a lot of research regarding reverse mortgage as far as a financial planning tool. And the research has shown consistently that people end up with greater wealth, typically speaking, down the road by getting a reverse mortgage than those who don't get a reverse mortgage. Now, I'm going to give you an example. There was an article written back in August of 2016 by Tom Davison. He's a researcher. He does a lot of writing about financial planning and reverse mortgages. And he showed the research that was done by several financial planning researchers that I think is very evocative. Now, what they did was they didn't want to guess what would happen in the future. So they went back and they wanted to show what would happen over a 30-year period with clients who either didn't get a reverse mortgage or did. So they took this couple who was 62 years of age in 1973. And they said, this couple has $500,000 in a stock and bond portfolio, half in stocks, half in bonds. They've got a $600,000 house, and Social Security doesn't pay all their bills. So they spend about 5.5% of what's in their portfolio a year to cover the rest of their expenses that Social Security doesn't cover. Now, this is a realistic client that we would see today. So they started this client in 1973. They showed us 3 different scenarios. In the first scenario, this client ran out of money by 1996. So the $500,000 in the stock portfolio went down to 0 in 23 years, simply by not taking out a reverse mortgage. Now, the second scenario was these clients took out a reverse mortgage in 1973. Now, what they did is they still used their stock and bond portfolio to pay their expenses on years where they were making a profit. However, on years where the stocks and bonds did not do well, they used their reverse mortgage funds to pay their expenses. Well, this client, after 30 years, saw their stock and bond portfolio increase from $500,000 to almost $1.1 million. A complete flip from the client who did not take out a reverse mortgage. But you know, that's not the best part of this story. The best part of this story is the client, and this is the third and last scenario, who took out the reverse mortgage in 1973, did not touch their stock and bond portfolio again. They used their reverse mortgage funds to pay their expenses. This client, by 1999, 26 years later, had seen their stock and bond portfolio grow from $500,000 to $6 million. Now, these are just examples, but it does show what has happened over a realistic time span. We've been able to see what the stock and bond markets did over those 30 years. We know what the interest rates did. This is very realistic. So, whether you have $5,000 or whether you have $10 million, give us a call, send us an email today, talk to us. We can explain how the reverse mortgage works, and we can show you different ways that it can give you greater wealth down the road and greater financial stability.